What's up, everybody? We're back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, how you can use a proven and repeatable strategy to make money every day by trading the triple leveraged Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. Make sure you hit the subscribe button and the notification bell. Sometimes we do release bonus content, so you do want to be alerted when that happens. Make sure you follow us on X. That way you're notified of our real-time entries and exits on our scalps and day trades, as well as in our mid and long-term trades as well. Just a reminder, we're not financial advisors. We don't offer financial advice, but what we do offer is our view of the price action for SOXL, not only in the current day and in the past, but where we think price action is going to take us in the future based off of our charting method and trading method. Our charting and trading method is based in the strat. If you're not familiar with that, hang with us through the video. It's simple enough that you'll probably pick it up by the end. There's three things a candle can do, be a 1, a 2, or a 3, and based off of those, there are about 6 main reversals, which we like to trade because reversals give you a very clear entry and a very clear target. There are also continuation patterns, which give you a very clear entry, but then you have to use your judgment on price action and where it's going and how it's acting, and as to where you want to exit. One of the things that can help you with knowing where you want to exit on a continuation pattern are the broadening formations that the strat also utilizes. These lines are, basically highs to higher highs and lows to lower lows. You extend those lines out, and you have a zone of where there's a high percentage chance of price going either in the upwards or downwards direction. So again, the strat, very simple to learn. There's a link to a free PDF in the description of this video. There's also a link in the description to Rob Smith's YouTube page. He's the inventor of the strat, no longer with us, but the YouTube page is still up and going. It has a wealth of knowledge, and you can do plenty of research on the internet about Rob and the strat. There's plenty of information out there. There is a big community on Twitter or on X as well. It's not a new strategy. It's been around for years, so it's proven. It's repeatable. You can use it on any chart, not just SOXL. So again, one of the reasons why our charting and trading method is based in the strat. For those reasons, it's proven and repeatable. So along with the strat, we do have our own twist that we put on the charts. One of those things is the 4-hour markers that give us pretty clear indicators for entries and exits on mostly intraday trades, scalps and day trades. We will get into those at the end of this video. Excuse me. We'll try and keep this video pretty short. So it's just to go over what this video will cover. We'll do a quick recap of today's price action. We'll real quickly look at the wide view of SOXL from the week, the month, the quarter, and the year. That way we can stay level set on where we are from an overall perspective. We're not too zoomed in on these intraday levels because we've been in this range for 9 weeks. We've been doing a lot more intraday trading, scalps and day trades, so it can be easy to get zoomed in and zoned in on those lower time frames. We want to definitely make sure we know where we're at from a higher time perspective, and then we'll go over the 4-hour markers that we use to set our triggers and targets for tomorrow, and we'll do a quick review of the triggers and targets for the week, the month, the quarter, and the year. We won't necessarily chart them out, but at least go over the numbers that we have in our notes. So let's get into the charts. Looking at the day, the price action today, we did get the 2 up to trigger the 2-1-2 up strat reversal, right? It did not reach magnitude though, right? The magnitude was the high of Friday. So, we did, go above yesterday's price action, triggering the 2-1-2 up, did not reach magnitude. We were dealing with that, pesky year flip that we've been dealing with for a while. 1 rejection, 2, 3, 4, 5, 6, rejection right here, 7, possibly 8 rejections of that 28.13 level. So it's continuing to be a pain in the side of bulls. If we look to the upper left hand part of this chart, we have the time frame continuity indicator showing that the day, the week, the month, and the quarter are green, but the year is red. So the bulls really want to flip that year green. That happens at this 28.13 level. But again, that 28.13 has been the top of this zone that this range that we've been in for 9 weeks. So although it was more of a bullish candle than a bearish candle or neutral candle, right? It was green, but we do have this little wick at the top with the rejection at the year flip, not quite making the high or reaching the magnitude of this strat. So got to keep in mind that this is the top of the range. We could be looking for a flip here on the hour, 4 hour, possibly. Even on the 15, if you find something on the 15 that would domino into triggering the 1 hour, and then that 1 hour would domino into triggering the 4 hour to the downward direction. We could have once again just the roll from the top of the range back to the bottom of the range. And that's played out well for us, right? Once it does trigger, you buy puts for the bottom of the range. Buy a month or two out. At the money, in the money strikes, and low theta on those contracts. You can let those push down to the bottom of the range, however long it takes, or however short it takes. If it goes in 1 or 2 days, you sell in the 1 or 2 days, and then reassess the market, see if we're going to reverse back up or if we're going to continue to push down. We do have the gap here on the day back from late June, that we bounced off of basically twice here, right? Didn't quite make it down here, but it did get very close to make that higher low before making the higher high. So right now we are in the uptrend from a day perspective. We had this soft lower high here, but it was a soft lower high because it was within a day candle itself, one candle. It made a high and a low at 3, basically, or what people would call a bearish engulfing candle. So we did get the 3, but we got the 2 down, almost a failed 2 down for the 3, 2 down, 2 up, or combo 2 up, and that did reach its magnitude. So since it did reach its magnitude, we can, it's not off the board that we wouldn't get a reversal back down. So again, everything playing out sideways. We're in this range we've been in for 9 weeks. I feel like I'm beating a dead horse. I don't want to go over it too much longer. Let's take a look at price action from a shorter time frame perspective. Let's just go down to like we'll look at the 5 just to get everything on here, right? And we'll bring up our scalp chart, and that way we have our important levels, right? And this is where we chart them out. This is last week's 50%. This is overnight low, previous low a day, 4-hour trigger to the downside, the week flip, the 4-hour trigger to the upside, previous high a day, and overnight high, all clumped in one level here. So we can see we opened up and immediately triggered the 4-hour trigger to the upside. So you could have went ahead and got in calls there. The target being previous high a day, so not a lot of magnitude. That wouldn't be what you would be in it for, is that small move, right? You would be in it because that once it reaches the previous high a day and goes above that, it then triggers the strat on the day perspective as well. So that gives us a higher target. So we did get the push up. We even got a higher low on the 5-minute time frame, which would give you confidence to stay in. Got another higher low here, and then we reached that year flip. So that was the first target for the morning, and it did end up reversing there, getting the lower high here. So as soon as we got this 2 up here, that was then followed by the 2 down, locking this in as a lower high. Our exit would have been the low of this candle, would have exited there. So exit there with profit from the 4-hour trigger, possibly the day trigger. We'll say the day trigger, 27.58 to 28.05. That's 50-cent move. With SOXL, that's a good percentage move. If you're at the money, in the money, that's good move in premium as well. If you've got multiple contracts, that's good profit. You could have ended the day right there and just watched, which would have probably suited you just fine because the rest of the day was sideways, right? If we take a look at the internals, you can see here's SOXL's price action, here's the tick, here's vol QD, money coming in versus money going out in the 80 QD, which is basically market breadth, or the QQQ breadth. So you can see in the morning, we opened positive. It wasn't anywhere near trend higher zone, but we opened positive and then had the push up. Opened positive, had the push up. Opened positive, had a slight push up. So you can see in price action, we opened positive and we pushed up. You can see for the first, hour of the market, we stayed above the 0 line, trying to get to that trend higher zone, not getting there, but at least staying above the 0 line, which again, combined with volume, money flowing in versus flowing out, and breadth expanding, that goes for price action to the upside, and that's what we saw. Then we saw, the internals start going sideways, and that's what we got from price action, sideways. So, and another reason you want to use internals is just another tool in your tool chest. Then after the sideways price action, the vol QD, which is probably the quickest moving out of the ADQ, well, not probably, out of ADQD and vol QD, it moves quicker than ADQD. Tick is always going to move fast. That's just how many stocks are ticking up versus ticking down. But the money, once you saw the money, after this drop and the money push back up to that level, that could have been another signal if you weren't already in calls to possibly get in calls, because you did get that push up through the end of the day, which then triggered the breadth pushing up. And then depending on you wouldn't want to enter just off of vol QD levels. You would want to look for your higher low or your lower higher, something. I'm not sure on the 15-minute what might have been there. Let's see. So you did get a higher low, but then it was a lower high, lower. So that would have been your higher low that you. No, that's not a higher low. Yeah, that's not too much of an indicator, I guess. Yeah, I didn't play anything at the end of the day. I didn't partake in that last movement in the last 15 minutes. So I guess, yeah, you wouldn't have really had anything to enter on there. It would have just been more off of, if you know that we've gone sideways all day and the bears are probably exhausted, you could kind of use this as another indicator to try and get in on the upside action. Oops, what did we do? There we go. So let's go back to our regular chart. So yeah, not a whole lot of action the rest of the day. This is where you would have made your money. If you're a scalper, you could have scalped those. That's plenty of movement, right? The chart is, I've got the chart blown up a little bit. It's not huge movement, but if that's your forte and you scalp those, if those are enough movements to get you some money. Maybe not here at the end of the day, but after the initial push up, the pullback, and then the second push up, and then the pullback again, those are definitely enough money big enough moves for you to make money if you're a scalper. So I think that's enough again from the day perspective. Let's take a look at the week real quick, and then we'll get into our triggers and targets. Here we go. So again, we are trying to set the higher low on the week, right? That was last week with the failed 2 down. So if we go 2 up on the week, that triggers the failed 2 down, 2 up, targeting the high of the previous week, which is the 29.66. If we were to do that, again, that would flip us green on the year, giving us momentum to the upside. So not just only targeting this high, but possibly trying to push up, make a higher high, maybe pressure this weekly broadening formation that we have here. So if you wanted to scale out of contracts here at this high, taking some profit, letting some runners go to see if we can go test that weekly broadening formation, I wouldn't be mad at you. So one thing we do need to keep in mind is seasonality. September, October, worst performing months for tech. Chips definitely fall under tech, so doesn't mean that we have to have some huge pullback or we start buying puts right now. It could just mean that we range for those 2 months, but don't necessarily want to expect huge pushes up in September and October. If it happens, it happens, and hey, we always have triggers and targets for upside and downside. We'll be ready, and if price action does push then through September and October, we'll ride it, right? But for right now, we have to go with what we know, and that's the last 9 weeks. We've been in this range from 24 to 28, so we've got to be prepared. Even if we go 2 up on the week, we could go 2 up on the week just to make a lower high, and then curl back down next week. So just got to be aware of where we're at. Be prepared to get back into the downside. Right now, either way, upside or downside, the trades I'm taking are more short-term, in and out, and until we decide whether we're going to go get above this year flip or if we're going to start going back to the downside. Now, if we get the signal on the like the hour and the 4 hour, then I start to look for those puts for September monthly, October monthly, and then if we get the confirmation, especially on like the day. Now we're looking, depending how far we pulled back already, now we can look at adding to that position and scaling in so that we can maximize our profit till we get to the bottom of this range, and then exit, scale out, leave some runners, and see if we are going to turn back to the upside or if we continue to push down. If we continue to push down, we take the trigger and we add back to the position again. back to those runners that we had, and to capitalize on that profit. Maybe we refill this gap here, or not refill, but fill this gap here, get below the monthly downtrend line again that we're contesting for a little bit, along with this weekly broadening formation and the year flip. Right now, it does look like we're above that month downtrend line, and the month is is green. So we're looking good still from the month perspective. Let's go ahead and bring it up. All right, we're still a green 3, but a 3 or an engulfing candle. Although they do definitely look spectacular on the chart because you are engulfing the previous candle. Price action went above and below, especially if the body of the candle is still big. It's not just like a hammer or an inverted hammer or something like that. It does lean more bullish, but it does show indecision because it did try to explore price action below and above, and we're back within the price action of last week. So last month. So we want to continue that push up to give us that bullish edge, but it is still leaning bullish from a month perspective. From the quarter, still the same there as well. We are in force with the 2 down, 2 up. Price action here is above the last quarter's high. So, once we triggered above last quarter's high, that put us on the 2 down, 2 up, targeting the high of the candle to the left of that 2 down. So that 36.15 is our target. Again, it doesn't mean we need to make it in this quarter. It may take a couple of quarters to get there, but that is the target from a quarterly perspective. So again, leaning to the bullish side of things. The year, this is where we're having our confliction and continuity. Our conflict and continuity. It did trigger the 1, 2 up, 2 down on the year. It almost reached its magnitude, right? The magnitude is the low of the candle to the left of the 1. So that's a 621 is the magnitude for this 1, 2 up, 2 down. We did get to 723, but again, that's not 621. So we could continue to push back down with this candle still being red, the year still being red. If the year flip, that 2813 does continue to be resistance for us, it could push that back down. Doesn't mean that we're going to go and actually fulfill this magnitude here. But we do, again, have seasonality on the board. We've got gaps to the downside. So could we have a pullback, a bigger pullback? Possibly. But again, from a perspective of the week, the month, the quarter, not yet. So we would have to flip those. We would definitely have to flip those bearish, or at least start like a downtrend on the week perspective for us to really think about closing these further down gaps. Closing this gap down here is fine. It's not that big a deal. It could just be another bounce point showing that the range or the zone may be just expanding down here to this 22 area and expanding up here to this 30 area instead of just this 24 to 28 range that it was in for 8 weeks, right? It could just be expanding the zone. Not a big deal. But if we get down here and start filling the gaps further down, then we've got to look at, we're probably looking at a bigger pullback if we get acceptance below this gap, right? If we get acceptance below this gap in the form of a lower high or something on the weekday, then we're looking at possibly filling that gap, and we would want to take that trigger and buy puts, sell calls, things of that nature to capitalize on the move to the downside. So let's go ahead and we've gone over today's price action. We looked at the wide view. Let's set our 4-hour markers and our triggers and targets for tomorrow, and then we'll just do a quick recap of the triggers and targets for the week, month, and quarter and year, because they do kind of roll into each other, and we could have some kind of a domino effect. So let's go ahead and bring up our 4-hour chart and our triggers and targets for tomorrow. Let's make this a little bigger because today's price action was so restricted to get our triggers and targets for the 4-hour. I'm going to kind of zoom in more than usual today so that we can see everything because they're so close, right? So if we trigger to the downside, that's a 2-1, 2 down reversal, triggering at the 4-hour, the low of the 4-hour, the second 4-hour candle from yesterday, right? That's our down trigger here, 2780, and the target or the magnitude is 2752. So if we go to our notes for today, tomorrow will be August 27th. Tomorrow there will be 85 trading days left in the year. We closed today at 2794. We know what the week flip is. We know what the month flip is, the quarter flip. Most importantly, what the year flip is, because that gets us full time frame continuity. We know what the market maker's expected move is, $2.52. If you're not familiar with the market maker's expected move, check out our weekend video where we give the details about where you find the market maker's expected move, and then how we plot it on the chart, because we do see we have a range here of 29.97 as a high to 24.93. If we look here on the chart, pull up our other chart. Oops. Why is it not on there? Oh, it's because it's up further. Sorry. 29.97. We can see the top of the week's expected move is up here. So let's get back into our scalp for tomorrow. So we can see that if we do get that push to the upside, we can expect maybe a little bit of resistance up here. It's not the end all be all. It doesn't mean price action has to stop there, but it's like a 70% chance that price action will remain within this 29.97 and this 24.93, which is the expected move, market maker's expected move to the downside, right? 29.97, 29.43. We know where the gaps are above. We know where the gaps are below, right? So this is just a quick reference, our notes, quick reference, so you can real quickly know where you want to get in and out. Looking at the downside, right, trigger was 27.80, right? That's the low of the second 4-hour candle from today, because right, the first 4-hour candle of tomorrow would trigger the 212 down. 27.80 is the trigger, 27.52 is the target. Now, what we do want to keep in mind is once we reach 27.52, that would domino us into a 1-2 up combo 2 down. So here's the 1, 2 up, and then this 1 with the 2 down tomorrow would make a combo 2 down, triggering here at this 27.52. And one of the reasons why we love a 1, 2 up, 2 down is because the trigger is the low of this 2 up, but the target is not the low of the 1. The target is the low of the candle to the left of the 1. So the trigger at 27.52, and we have a target of 26.81. So we can see that, again, the 4-hour triggers at 27.80, this 2-1-2 down, magnitude of 27.52, which would then trigger the 1-2 up combo 2 down with the magnitude of 26.81. We've got some extended targets here, but we don't really need to look at those because they really will come into play with the day. The 4-hour targets really roll into the day. So we'll go ahead and look at the upside. If we look at the upside, we would have a 2-1-2 up, right? So here's a 2-1, it would go 2 up, triggering here at the high of the second 4-hour candle, which is this 28.14, and we would only have a magnitude for that reversal of 28.22. So not a lot here. That you wouldn't get in this 4-hour trigger just to get to the one day. To the target, right? But nevertheless, we're gonna go ahead. We go ahead and chart it. The 28.14 is the trigger. The magnitude being 28.22. This would trigger the 1 combo 2 down, combo 2 up, because it has not reached its magnitude yet. It did trigger today, but it didn't reach the magnitude. The magnitude is the high of this candle, the candle to the left of the 1, which is 28.32. So we do have a 1-2 down, combo 2 up with, let's go ahead and get our notes right. Right, so the first trigger would be 28.14, giving us a magnitude 28.22, which would then trigger the second strat into this 28.32. Again, we've got extended triggers and targets, but we don't really need to talk about those. Those will be in the triggers and roll into the extended triggers and targets of the day. Let's go ahead and look at the day chart. All right, and we can zoom back out a bit, give us some perspective. We just needed to make sure we saw the 4-hour levels. But again, we see the day here. We've got our range from 24 to 28 that we've been in for 9 weeks. If it triggers to the downside, that is a 1-2 up, 2 down. Again, why we love the 1-2 up, 2 down, because the trigger is the bottom of the 2 up, but the target is not the low of the 1, but it's the candle to the left of the 1. So that would trigger at 27.52. So we see here to the trigger to the downside, 1-2 up, 2 down, trigger at 27.52. Magnitude of 25.34. So that's the candle, this candle right here, the low of this candle. So that gives us a lot more magnitude to work with. So this is one of those dominoes that we talk about, right? The 4-hour triggers here at 27.80, and the magnitude is 27.52. That magnitude then triggers the day, which gives us an even bigger magnitude. So 27.80 to 25.34. That's $2.50 movement. That's a big movement for SOXL. You can see how 64 cents gives us almost a 2.5% move. So we're looking at $2.50 move. That's 15-20% move for the underlying ETF. So we have that magnitude. Now that would then put us in a 1 combo 2 up, 2 down, right? Here's the 1 combo 2 up, and then if we get back down to the bottom of here with this 1 2 up, 2 down, that makes a 2 up combo 2 up, 2 down. Again, the target is not the low of the 1, it's the low of the candle to the left of the 1. So once we reach that 25.34, that would trigger the 1 combo 2 up, 2 down with the target of 23.66. So we can see that would give us an even bigger movement, right? So 27, if we took the 27.80 trigger on the 4 hour, it has the potential to take us all the way down to 23.66 on the 4 hour. Right? If we have some type of sell-off tomorrow for whatever reason, because again, NVIDIA doesn't report until after hours tomorrow, but for whatever reason tomorrow, if we have a sell-off, there's a potential, a high percentage chance of, if things get rolling and there's enough momentum, you could go from 27.80 to 23.66 in a day. It wouldn't be too much to ask for SOXL. We've seen bigger movements before. So those are your triggers and targets to the downside. We do have some extended targets here, 22.95, which is the low of this candle, and then the 22.57, which is the low of this candle. Those would give us lower lows on the day perspective, right? This will be a lower low, lower low, lower low, and then that puts us, at possibly filling the gap. Do we fill the gap tomorrow? Probably not, right? Those are just domino triggers and targets, but it shows how if momentum gets rolling, especially with SOXL, a high beta ETF, you can actually reach those magnitudes. So let's look at the upside. Upside, we would have a 2 up, 1 2 combo 2 up right here from the day perspective. Here's the 2 up, 1 combo 2 up. The reason why it would be a combo 2 up is because this 2 1 2 up did not reach its magnitude yet. Magnitude being the high of this candle, 28.32. So if we do go higher than today's high, the initial target is just going to be the high of Friday, this 28.32. So we do have this mapped out. 28.22 is the trigger, 28.32 is the target, but we also have the extended targets of 28.71, 29.66, and 30.55. 30.55 should be ingrained in your mind if you're familiar with this video, but the 28.71 and 29.66, that's the high. 29.71 is the high of this candle, 29.66 is the high of this candle. That would also put us around the market maker's expected move, the high for that move, as well as this weekly broadening formation. So maybe you get a poke up above to get a higher high on the daily perspective, but you could see a rejection off of, basically a combination of the weekly broadening formation, the market maker's expected move, and basically just reaching exhaustion at that point. Not too far above it is the 30.55 target that we have, and you can see there's nothing on the chart right here, 30.55, but again, if you're familiar with this video or with this series, should be ingrained in your brain. Let's go to the month perspective. But if we draw Fibonacci's from the 2020 low to the 2021 high, basically, or the all-time high, the 61.8 fib, that's that 30.55, and you can see how it was resistance here, it was support here, resistance, support, a little bit of resistance there. So it's a major level as far as price action is concerned. So we don't want to have that 30.55 out there on the board as well, right? So there you have it for the at least from an intraday perspective, your 4-hour triggers and targets to the downside, to the upside, for the 4-hour, day downside, day upside. And again, these daily triggers and targets, they'll roll into your week triggers and targets. I guess we'll pull up the week. We won't do the month and quarter and year from the charts, but just from a week perspective, we're trying to set this higher low, so we're looking for the 2 up. But again, the right kind of news. Tomorrow's say tomorrow's a sideways day, and then NVIDIA, has negative, there's a negative reaction to NVIDIA's earnings. We could find ourselves back down here towards the lows of last week, threatening the flip of the quarter and the month, flipping them red, obviously flipping the week red. Which will put us in full time frame continuity to the downside, actually, right? Which would give the bears momentum. So you can see how the reason why we're not going long as far as expiration dates right now on new contracts to the upside or downside right now, right? We're at a critical point where we're very easily flipping full time frame continuity to the upside or downside within $4, $5. So that's why we're doing a lot more of intraday plays than we normally do. A lot more scalping. Again, we're looking for a possible rollover at the high of this range here. We didn't buy any puts today to swing overnight looking for that. But what we're waiting for is the trigger to tell us we would be going back to the downside, either on like the 1 hour dominoing into the 4 hour, which dominoes into the day, or something like that, to give us a kind of a head start. Maybe dipping our toe in early with a few entries higher up here, and then once we get the lower high in the hour or the lower high in the 4 hour, more down in this range, we can add to it, get maximize that profit to the downside. Sell, scale out a little bit, leave some runners, maybe look for further push to the downside, or if we're gonna flip back to the upside, we get rid of those runners, keep our profit there, and then we look to buy calls back to the upside, right? Giving ourselves plenty of time on the contracts, buying September monthlies at the very least, preferably October monthlies. So either direction, we're ready. Again, if we do get the push to the upside and go 2 up on the week, that gives us the 2 down, 2 up, targeting the high of the previous week, which is that 29.66. Again, we could just get that very little poke above, right, to give us the 2 up, and then it fails back below because we're still in contention with this year flip. It could still suck us back down. If that happens, then we have to look at the following week. If we go 2 down, that locks in a lower high, and that's starting to negate this uptrend that we've started here. So from a week perspective, things are still kind of fragile if you think about it, right? You don't want to get too far over your skis, even if it goes 2 up. Again, dip your toe, explore the waters, have your set stop, so you stop out at even or at slight loss if we do pull back, but at least you're in some contracts to the upside, and then we'll see if we can go contest for a higher high on the day and week perspective, as well as possibly going to test out that weekly broadening formation. So those are your triggers and targets. I'll put them back up on the screen here. I hope everybody enjoyed today's video. I hope I didn't waste too much time. I tried to get through it as quickly as possible while still going through some good detail. I think it was a pretty comprehensive video. We went through today's price action on a granular scale. We looked at the internals. We looked at things from a wide perspective, and then we set our triggers and targets for the 4 hour, the day, and then reviewed the ones for the week, the month, the quarter, and the year. So again, I hope this covered everything for everyone. If I went too fast or didn't cover something in depth enough, please let me know in the comments. I'd love to help anyone out that I can. This channel is not out to make money. You don't see me selling anything. I don't have any merch. The PDF I provided, you don't have to pay for. I provide links to as much free information as possible. My goal for this channel is, to spread word about the strat, because although, the strat community has been around for years, right? It's a proven and repeatable strategy. I don't use it just for SOXL. This channel is just SOXL based, so that's why I talk about only SOXL here, but it's a proven and repeatable strategy that I use for all other tickers that I trade. And, SOXL is not a new ETF either. It's got history behind it. So you've got a trading method, a charting method, and an ETF that have been around for years that still are kind of fly under the radar. So our goal is to, kind of let everybody know out there about SOXL, the benefits it provides, especially from an options perspective. You've got, again, the high beta ETF from wherever you're doing your research. It's 4 to 5, is the beta for the underlying ETF. The options premium are low when you take into account the high beta to low theta ratio that you get, especially if you're playing at the money and in the money. And you combine those together, and it's a recipe for a lower risk entry, a lower risk, lower cost entry for high potential reward. So it's something I just want to spread the word about. Also, the more people that trade SOXL, the more liquid it becomes. So that's another benefit for all traders as well. But if this trading method, which I did not invent, I just use it along with my little tweaks to establish a repeatable strategy to get consistent gains, consistent profits. If I can help somebody in their journey, trading journey, then that's the benefit, mentally, that I'm looking for with this channel as well. So again, we're not out here to sell anything. Just want to spread the word about the trading method, the charting method, and SOXL as a ticker. So I hope everybody enjoyed this video. If you did, please give it a thumbs up. It helps spread the word. And look out for our other videos as we upload them. Again, from time to time, we do have some bonus content. Go ahead and cover the rest of your tickers that you need to cover tonight. Get your charting done, and then get you some good rest. That way we wake up refreshed tomorrow, and I hope everybody has a great day of trading tomorrow.